All right, folks, so my next guest is without a doubt one of the best technicians on Wall Street, and he just opened his own shop. So let's bring in Suttmeier Technical Strategies President and Founder, Stephen Suttmeier. Congratulations, my man. Appreciate it.
Thanks, Charles.
It's, of course, loved working with your father, the times that he would be on. He was a great person. You guys have a legacy here that you're working. So, looking at your weekly report, I want to kind of just start with the second half.
Right.
Because you laid out a couple of scenarios for the second half of the year where we could be anywhere from the S&P 6,400 to 6,600.
Correct.
So what's the difference here? What takes us from one to the other?
Well, the average return for the second half of the year would get you towards that 6,400 level. But when you think about 2025, it had its ups and downs in the first quarter, but you finished the first half. You finished the first half with a 5.5% return. And whenever you have a return over 5%, you tend to do better in the second half of the year.
Is that just that momentum carries you, or the reasons behind that momentum? In other words, does the fundamental backdrop just seem to be getting better overall, typically?
I mean, usually that's kind of what happens behind the technical charts,
right.
But the data suggests, going all the way back to 1928, the scenario would support the case for 6,600s on the S&P.
So in the meantime, we've broken out here on the chart, right?
Yep.
How do you determine? This is the question. We have a breakout. We're at new all-time highs, right? For me, it's like if we go here and then we start to rebound, I'm like, okay, that's the target. I mean, but now, how do you determine the next target when we have these kind of breakouts?
Well, I mean, put it this way. First, you have to determine whether breadth and volume confirming, which they are. You got other indices breaking out, but you just you can take retrace extension levels on Fibonacci. That also can get you to a 6470 level. Longer term, a one-for-one measure move, believe it or not, would get you to like 7490 on the S&P. Over time, that's like a 2027 type of move.
So that's not out of the realm of possibility.
Not out of the realm of possibility. In fact, when you rally off a major low like we did in 2022, I mean, this pullback was just a correction of the uptrend from 2022. You tend to rally over 100% anyway, so that gets you into the 7,000.
Are we still in that secular rally that began in 2009? I mean, that longer term kind of thing. Is this all still within the framework of that? Yeah,
definitely. You had a generational low in 09, similar to 75 and 42, and that should extend into the late 20s, early 30s, with the S&P going higher.
Tactical ratings, these are short term. Right now, this is where the momentum is.
Correct.
And you don't fight momentum, right? I mean, a lot of people come on and they say, well, technology's overbought, right?
Well, if it's confirmed by relative price action, I go with it, and technology is. Technology in our trend score models has recently just indicated that it came out of a cyclical corrective phase within a larger secular bull market. The S&P did the same sort of thing. So when you're looking at that, it's the same chart as the S&P, obviously the heaviest weighted sector.
Right.
But you can see, I mean, if you do get a throwback, pay attention to that 26 40-week moving average right here. 228, 225. If you hold above there, you're still in an upward trajectory, firmly speaking, with more upside for technology and XLK.
So essentially what we're saying, folks, is the market's had a huge move. We pulled back, but we hold above here. You start to lift off there. It's potentially a huge buy signal.
Correct. Yeah. So basically, when you break out, sometimes you pull back towards the breakout point, and that's actually a better entry, believe it or not, than where we are now.
I love those too. I feel real comfortable with those. One thing that you mentioned, and I love, is that volume precedes price. Right, and so we're looking at the small cap names are coming on pretty nicely, sort of a stealth move here, the Russell 2000. You've got two charts. I want to just talk to you about this volume advanced decline. This is just showing a potential buy signal.
Yes, it is a buy signal. It went to new all-time highs.
Right.
And believe it or not, that makes the case for the Russell itself to go to new all-time highs. This particular chart just shows us we got this little head and shoulders bottom, and we got potential near term to the old highs.
So the advanced decline. Now here's the thing: they underperformed dramatically versus the S&P 500. I mean, this is the Russell versus the S&P 500, folks. We're turning here. It looks like we're potentially turning. Do you wait to clear these moving averages, or do you what's the exact buy signal?
Well, I mean, longer term, you're looking for a bottom or a basing pattern, and a longer term.
Is this long enough here?
For a tactical rally, I think it is. I think it can rally towards the falling 200 period, or in this case, 200 day moving average. Maybe if we drew a trend line on here, just take it all the way down, get up to that level as well, which you picked out perfectly on that line.
Pure luck, my man.
But that's what happens. And then after that, if you pull back and hold these two moving averages, the 100 day and 200-day moving averages as support,
Right.
then you can make a case that perhaps small caps can actually take longer
Right.
leadership.
Right.
But the thing about it is secular bull markets are mega cap and large caps events where small caps can graduate or get bought out by large caps, and you got a negative survivorship bias sometimes in the Russell.
Right.
But again, you can't rule out periods of outperformance. You had one right here in 2022 to 2023.
Right.
That was pretty good alpha versus the S&P.
Yeah. And essentially, folks are saying sometimes these small caps, when they become too successful, they go away. They're no longer represented in the Russell 2000, which is why it doesn't ever have that sort of massive outperformance. Congratulations again.
Thank you.
You are really fantastic. We learn every time you're on the show. Thanks, Stephen.
Yep, thank you.
Really appreciate it.